Чуть-чуть.
Хорошо?
You're live. Okay, hello to everybody. Today we have webinar and speaker Alexander Nikolenko. Yes, and topic today. Today's topic: financial planning for business owners. I would like to Alexander introduce himself, and we started.
Thank you. Thank you, Lena. We can trade places with you. Yes, ladies, gentlemen.
Gentlemen, the only one, no, two gentlemen.
It's a pleasure for me to be here with you in the club. Lena provided for me a nice introduction. Ultimately, the purpose of our conversation today is to open a window into this world of what it is like to be a business owner. Is it rewarding? Is it scary? Is it producing the hopeful results that we'll create for ourselves? And I'm planning to give you a quick overview of what is there for you to keep in mind, what is there for you to look out to when it comes to planning for your business and making sure that it grows. That's all. Okay? So you absolutely, if you feel that there is a question that you want to ask me, by all means, please stop me. I'd be happy to explain the subject. But in the meantime, you have your own businesses, right? And you know that every business has certain commonalities with other businesses, right? You have a purpose to your business, whatever the purpose would be. You have certain benefits that your business delivers to your clients, to your customers. You have certain benefits that you want to get for yourself. So otherwise, it's kind of pointless. If you're a business owner, if it doesn't benefit you, yeah, probably you should change the place of work. And what comes also with it, there are certain arrangements that we as business owners have to set up, right? There is some managerial structure that will be present. There is some, you will hire some employees, most likely, if you don't have them yet. But eventually, you would want to have your business flowing through different stages of growth from initial establishment to next level where you're actually not just making money enough to pay the rent and to pay the bills, but actually when you start looking at having the business provide for you long-term benefits. We call it monetizing the business. Okay, and how to do it right? In this country, we have benefit of favorable tax laws that exist. There are benefits that businesses can provide for us as we run them, and we can on the road to monetizing it, we can use cash that business provides for us right now for long-term goals, such as expanding the business, such as sending kids to college, such as providing for your own retirement, and things like that. Okay? So that's all available for us, but it is really important to kind of understand how it functions in this country, how we can utilize existing laws and favorable conditions for business owners. We okay so far?
Yeah.
Sure.
Before we jump into some structured conversation, you as business owners, what keeps you up at night?
Tax, for example.
Taxes.
Tax optimization, let's say.
Right. No point in paying extra taxes,
Yeah.
right?
Yeah, sure.
Anything else? Any
Or cash flow.
cash flow?
Not
Exactly.
enough money for paying rent, for example.
Okay, that could be. So you're concerned about ongoing business
Of course.
operations. You want to have enough revenue coming
Yeah.
in so that it
Making
covers your
extra income.
expenses.
Making extra income.
Extra income, right? For what purposes? It can be business expansion,
Yeah.
right? It can be exactly for those things, monetizing your business for the future, where you
Yeah.
take that extra cash,
And minimizing of taxes.
Yeah.
minimizing of taxes. Yeah, everything, whatever we do, ultimately we want to pay less taxes. We want to invest more into business for the purposes of it growing. so far in this country, we still have the conditions where that is possible.
Thanks God.
Yeah,
Yeah.
let's keep that perspective. So, in terms of business operations, you know what your businesses are delivering. Okay, even if you're one person operation, you are in charge and you basically wearing different hats. You are the doer and the maker of certain things in your business, but you're also the thinker. You're also running the business. Okay,
Strategically.
strategically.
Thinking strategically.
And what that position is called, it's called sole proprietor, right? You're a sole proprietor of your business.
Mhm.
You're responsible for everything in your business.
Sure.
But you know that there are different structures that exist. So there are, like, let's say you're running your business on your own, and then all of a sudden you realize that you're short on cash.
Mhm.
What can you do? In order to raise capital, you can actually, or bring some talent, you can make partnership with another person, right?
Mhm.
And then you form partnership, you sign formal agreement, partnership agreement, and then you run operation with a little bit more cash available to you.
Mhm.
Again, problem of small business is always being a little bit undercapitalized. You have all these great ideas, but then where do you have capital coming from?
Mhm.
Right? That's just what happens in a small
Yeah.
business.
This is the main problem at start.
Exactly. At the beginning. And so basically what we're going to be talking about throughout this conversation is that, let's say you start your business here and you're a sole proprietor,
Mhm.
right? So in order for you to grow your business to the next level, you're active, you're doing stuff, right? But then as you do stuff, what will be happening? Sooner or later, you will run out of steam.
Mhm.
There won't be enough capital stuff. You would have to have something else happening, or fresh idea that would help you take your business to the next level. And then eventually, again, before decline, you want to hop on new technology, new product,
New
new
kind
something,
of marketing, everything.
new marketing, and all that. So ultimately, you want to have this growth occurring over a long period of time.
Mhm.
Okay. Now, again, this is the sole proprietorship, but if it helps you to get partnership here in order to get to the next level, all you need to do is just simply be mindful that by the time you're ready to bring on a partner, you want to have strategy
Mhm.
to this product process, right? You want to have legal documents appropriate for the partnership, so you don't end up facing liability in a place where you don't expect it. Because running your own business, it's actually challenge. Exactly. Thank you. Yeah, you're doing it, and there's nobody else to sort of bail you out. You are responsible for everything, unless it's a partner and you're understanding, and then it's a two of you, or maybe three of you, or five, or what have you. But then at some point of time, when there are more partners than two or three, you probably want to look at this different structure of your business. Maybe you want to create like a limited liability company or a corporation for all intents and purposes, right? Where liability is, in case something goes wrong, it's not going to be just on your shoulders, but it will be spread amongst the people that work with you, partners. Okay? But again, having liability, it's only one of the elements to be mindful of, right? What if you do something and your customer is not happy, and and you have a lawsuit on your hands? Then what? It's a risk. What other risks besides liability for something that we do in the business? There are other risks as well. Risks that your equipment may break.
You're getting unhappy with all this stuff.
Exactly. So what we need to think about, like what are the risks factors that you can think of right now for you as a business owner that you need to be mindful of. So we talked about liability, right? Talked about risks of your equipment breaking down. What are the risks?
Like about people who like makes money from my business. I mean,
Your employees.
Yeah.
They could get
Human-
hurt on the
Yeah.
job.
Humanity business.
Yeah.
Humanity risk.
Human being risks.
Yeah, that, yeah,
Human being.
human being
Yeah.
risk. Yeah, we run businesses, and obviously there is certain level of risk that your employee will either get hurt on the job, right, or is expecting something, but then that something doesn't happen, like in raise at the end of the year, right? And then employee all of a sudden leaves you. You were counting on that employee being important to you, but then turns out that there was no communication between you and your employee, and the employee thought, "Oh, I'm going to get this," and turns out he or she is not getting it. So, how you retain your employees, right? How you reward them? That's one of the questions that sooner or later comes up.
You need to have some benefits. Yeah.
Benefits, exactly. So, we as business owners, I am business owner myself. I've been doing this for over 20 years, and I'm a financial advisor. And years back, when I was running some other business, I received an instruction from my accountant who said, "Oh, in order for you not to pay such huge taxes this year when you made the money, you need to go to a bank and set up a SEP IRA." And I'm like, "What? What was that? Say it again." He says, "Oh, it's a retirement account." What is a retirement account? To me, it was all complete unknown. But at the time, I was going through some educational growth. I was actually completing MBA program at University of Chapman, at Chapman University, and I thought to myself, if this is me asking these questions with supposed education, what about other business owners? They probably have very similar questions. They probably have similar concerns. So it gave me an idea to actually look in this direction of financial services to see how I can share with business owners experiences that I had as a business owner, and then some knowledge about financial markets, about planning, and help them benefit. So hence, I'm in this business. And we're here sitting and kind of chatting about this stuff. So coming back to the question of risks, any other examples of risks
Of
that you can
course,
think of?
economical, for example. Like
Bingo.
Huge risk.
Huge risk. Yeah. What if economy is doing great, right? Oh, everything is fine. What if economy is not doing great? It's in the recession. Then what? Is it a risk? Very definitely.
Yeah, government is the biggest risk of
Exactly.
all businesses.
Well, hello. So yeah, thank you. These are definitely different aspects that we need to keep in mind. And government is risk for us because they can change rules and regulations on us.
Sure.
And that's huge, particularly if you're in a regulated field that has to do with medical or anything like that. So yeah, huge.
Yeah.
Given all these things, we invariably will be looking at ways of minimizing the risk, right? So one of the ways of minimizing risk is to do things that are kind of like avoiding risk altogether, or we buy insurance, liability insurance, for example, right? In case somebody walks in your business, slips and falls, and boom, right? Your business is protected. Umbrella insurance. If you have business that you run equipment through your business, okay, you want to have some insurance if that equipment breaks, right? But there are other insurances you definitely want to have when it comes to offering benefits to your employees and even to yourself. What is the most fundamental thing that comes to your mind right now when we're talking about insurance?
Health.
Bingo! Thank you very much.
You're welcome.
That's exactly the first benefit that everybody ultimately is looking for. Yes, in this country, in the current legal environment, there are ways of people actually being able to buy individual insurance, but more often than not, people who go looking for a job with businesses, they're hoping to get the employer providing health insurance as part of the benefits. The reason is that employer-provided health insurance could be more beneficial. It would have more and broader let's say, networks that are wider. It will have access to more doctors and nurses and all that, hospitals and things. So definitely, that is a tremendous benefit for an individual looking for a job to get coverage through employment. Okay, but besides that, your employees would have to be covered by different type of insurance, and it's called workman's compensation insurance. In case something they get hurt on the job, very important and something to keep in mind. Now, outside of that employee benefit, you would be looking at benefits for yourself as the business owner. Maybe you can structure the health insurance in such a way that your family would benefit. Your employees will get something basic, but then you will do what they call carve-out insurance, where business owners or business owner will get more beneficial policy. Is it possible? Yeah, possible. It's not prohibited, just in case. Okay, maybe you're not there just yet, but keep it in mind. This country is flexible enough. We have enough leverage on negotiating with insurance companies what benefits are important to us when it comes to designing health insurance. Okay, for business specifically. Other things. When you're own, the value of your business is your own activities. We talked about self-proprietor. Now, how much is your business worth when you're running it on your own? That's the balance sheet exercise, right? So what is that in your business? That is there some equipment? Okay, yeah, it's part of the. Is there some investments in real estate? Is there inventory that you carry, right? It's all going to be on the balance sheet versus things you own versus what you owe, right? That's the capital. So obviously you want to grow that. And as your business expands, value as the person who runs the business expands as well. Now you have families, right? And your families, you want your families to benefit from you running the business, right?
Not
now, what
because
happens
of
if you?
process, because of earning.
Well, because earning power, right?
Yeah.
So I want to have my family protected. So what do I have? I have life insurance on myself in case I die. I want my family to at least have the to be protected and receive certain benefits that the business, while it's still growing, and I'm still growing my business, so it will be delivered to them if I'm not around. So I'm protecting the risk of me not being in the business. Also, me as a business owner, I have insurance on my ability to work, show up at work, and earn money, right? In case I'm not able to do that due to illness or accident, right? I have disability insurance protection. That's also important because bills, roof over our head, somebody needs to cover it. So hence, all different levels of risks that a business owner invariably will be thinking about on protecting himself or herself from. And even at the point where you have partners, the only thing that gets added at this point is protecting your partner's interest if you are not in the picture, and vice versa. And there is certain legal arrangement that is necessary in this situation, and it's called buy-sell agreement.
Very important.
Very important, right? So if I'm in business with my partner, all of a sudden my partner is not there, do I want to be in business with his spouse?
Yeah.
And vice versa. That's ultimate question that at the level of partnership everybody is asking. So again, we're just touching on sort of tops of the mountains, okay, or rather pointing like a projector of some sort. Strong light to identify these different points. And up to this point, do you guys have any questions? Anything?
I have one.
Yeah, sure. Please, Masha.
What kind of insurances are prohibited for business? If there are kinds of insurances which are prohibited,
I'm not sure.
которые обязательны. Yes, with
Oh.
the,
Compulsory insurance. No,
I don't know what kind.
No, prohibited. It's when it's
Okay,
not allowed.
sorry,
But
but нужное.
Necessary.
oh,
Necessary.
necessary. Yeah, thank you. Got
Sorry
it.
for my English. I'm on
No,
my
that's all
way.
right. That's all right. We're working through it. Well, what is mandated if you have employees? The
Mandated.
yeah, it's obligatory. You have to have it, right? It would be a workman's compensation. If you have employees and somebody is working for you, you have to cover that person in case he or she gets hurt on the job. That's called workman's compensation.
For whole kind of business.
For anybody, yeah, for any business,
Okay.
but family business. In the family business, you don't have to provide workman's compensation for your spouse. Sorry, my dear.
I have a lot.
You're protected. Okay, good. So that's mandatory. The rest, it's thank God we're a free market and we have ability to actually choose which risks to cover.
Okay. Thank you.
Now, if you have fleet of trucks, what will be mandatory is for you to have insurance on your cars and trucks, right? But that's the only thing that's mandatory.
Thank you.
You're welcome. Thank you for a good question. Now, one of the things that we touched upon, because there are so many different aspects of running a business, right? Invariably, we talked about legal professional to be there. We talked about accounting. Somebody would need to do your accounting to create that cash flow analysis or to create the balance sheet for your business. You want to have a team of professionals supporting you. So you want to have an accountant, you want to have somebody on the legal side who will consult you, you want to have a financial planner like myself, you want to have an insurance guy who can help you with all those different levels of insurance, liability insurance, car insurance, things like that. You want to have investment guy as well. The reason being is that at some point of time, your business will be making enough money that not only it's allowing for the reinvestment into business and growth of your business, but also into monetization of your business, we talked about, right? Where you can save on taxes by putting money away into retirement accounts. And the favorable part is that we put money into those accounts like 401k, you probably heard about, right? Or variations on the team, but we make contribution with pre-tax money, which means that we save taxes whenever we put money into those accounts for long term. There are some caveats. I'm going to talk about those retirement accounts shortly, but we, in running this business of ours, running these operations, we're going to invariably divide our monies into buckets. More or less. Okay. And the buckets would be important. It might sound familiar, but we're going to have short-term bucket. We're going to have mid-term bucket. And we're going to have long-term bucket. Interestingly enough, this is very similar to individual planning. Conversation we had a few weeks ago, right? Because you're a business owner, you are kind of wearing two hats. You're running a business, but you're also personal, kind of like that's your personal financial structure. And if I can use some help from the audience, when we're talking about short-term bucket, right? What's the time horizon that we're looking at this point? In other words,
1 year.
Less 1 year.
no, actually more.
More?
It's from 1 to 3 years.
1 to 2.
But 1 year is important because if you're running a business and you don't have steady paycheck, you want to have very definitely part of the short-term bucket, emergency reserve. Remember?
It's okay. It's a cash.
Yeah, some kind of liquid accessible money, so that in case your next season, you're producing, let's say, some gadgets and they didn't work for some reason, right? And you expected X amount of revenue and it was half of it. Then what? You need to have some emergency reserves. Now, emergency reserves, think of it like a war chest. You need to have that money available. And if in personal planning, we talked about 3 to 6 months, in business setting, we're talking about from 6 to 12 months of cash in this reserve. Okay, that's for different things that might happen that are a little bit uncontrollable. You don't know about that. Okay? But then for expansion of your business, right? So if here you're talking about 1 to 3 years, maybe you have expansion plans to grow your business. Let's say acquire some real estate business, acquire some new technologies. And if it's within this time horizon, okay, you keep it here. Now, midterm will be from 3 and up to 7-year time horizon. Okay? And then anything that's longer than 7 years, that's a long-term bucket. And what will end up happening is that depending on the time horizon, you will have cash or investments like some bonds, something that produce income, and then yet you still have access to the money sitting in these buckets, providing you with money when you need it and some stability with opportunity for growth. The long term, this is where we will put our retirement monies, like 401k, for example, that we just mentioned. That's the tax efficient way of keeping your money available for your future more than 7 years from today. Okay? And important aspect will be to understand, again, what kind of monies you will keep in these buckets. Short-term buckets will have cash and CDs and things that are clearly quickly accessible, and then bonds and maybe some even owning stock that pays dividends. That's what will be sitting in this bucket, but available for you when necessary. So, are we okay here? Thank you very much. So, next subject I wanted to focus on will be this idea of tax efficiency. I mean, it's pretty obvious that if I don't have to pay taxes on something, I get to keep the money. Who wants to keep the money? Yeah, who wants to keep the money? Let's talk a little bit about this concept of saving inside of a long-term structure like a 401k. Okay. The 401k, it's a revenue code. The program is called after certain article of tax revenue code, 401A and variations on the theme, but it assures that monies that are going into that little kitty is growing without having to pay taxes on the growth, which is huge. Not only I'm placing money there before tax, but also Uncle Sam says it's okay for you to keep the money there and grow it without having to pay taxes on the growth. The only caveat will be that sometime in the future, when I start using the money, Uncle Sam will say,
Yeah.
pay me now.
Yeah.
But not for the whole sum, but just for the money that we take. Okay, that's important. So, what types of retirement plans are going to be available for us to consider? Particularly when we're finishing tax year. So just recently, on Monday, we thought we finished filing for taxes of 2022. Well, that's not exactly what Uncle Sam planned for us. They gave us extension.
We tried to do it.
We tried to do it, but they said, no, you have another month. Okay, whatever. And our accountants, they didn't like that. I understood. In any case, what happens is that Uncle Sam gives us a break for the money we put into retirement plan. We put the money there pre-tax, as I mentioned. Now, how much money we can put into those arrangements? And there are variations on the team. Even without having a business of your own, person can create individual retirement account, an IRA. IRA. And anybody could place $6,500 into the account in 2023 pre-tax, meaning that if I place this money into my account, I will save me whatever tax bracket I'm in. Let's say I'm in 20% tax bracket. So I'm going to save me some money from this contribution, and the accountant will say, good job. Okay. Now, if I'm married, well, guess what? We can double this, each one of us placing $6,500. If I'm older than 50, and yes, I am, I can have additional catch-up contribution of $1,000. It's called catch-up. And so my total contribution can be, for the family of two, can be up to $15,000 per year. Is it good, bad, or neutral? It's phenomenal, because it used to be $2,000 per person that Uncle Sam allowed us to contribute some 20 years ago. Okay, so yeah, the reason that it is important to understand is that having your own business gives you this flexibility of protecting your future now, monetizing your business. Okay, not only having a business pay for your roof over your head and bills and cover your expenses, pay for your kids' education, right? But also provide that stability for the future and have these, even as simple as $15,000 between the two people in the family, to larger ways of saving. If we're using variation on the team, retirement plans, okay, there is what they call simplified employee pension plan, IRA accounts, SEP IRAs. And these